right, what's happening, my friends? Welcome back. Core concept on the CPA exam has got a long, predictable history. Inventory. We know inventory is a current asset, sits on the balance sheet, does not get expensed until the product is sold, and then we match the selling price with the cost to calculate your gross profit in accordance with the matching principle. Just be on the lookout for the types of inventory. Are you a retailer, in which case you only have finished goods, or are you a manufacturer, in which case you might have raw materials, work in process, as well as finished goods? So the first thing we have here, how do you know it's inventory? The item is held for resale. We know it's a current asset. The question is, are you holding it for resale in the ordinary course of business? If so, that makes it inventory. So a retailer will pretty much only have finished goods. They're going to get that item, and then it's resold in pretty much the same condition in which it was purchased. They don't really do anything to it or much of anything. Finished goods, that's it, retailer. Manufacturer, 3 stages of inventory. The raw material, which is going to include the freight in. Okay, so freight in is part of the cost of the material, not freight out. We know that's selling. Freight in minus any purchase discounts or whatever. So raw materials. Then your work in process, started but not yet completed, and then finished goods. We've completed them, and that inventory is ready for sale. Okay, so manufacturer is going to have 3 stages of inventory. Now, as a general rule, folks, inventory includes what? Any goods and material in which the company has legal title. So as a general rule, whoever has title probably has physical possession as well. All right, so we've got to figure out who this inventory belongs to, the buyer or the seller. As a general rule of thumb, if you've got possession and you've got legal title, then you know what? We're going to include that in your inventory. But there are exceptions where you might have legal title, but maybe you don't have possession. So let's take a look at some of the little details here. Note in the question, by the way, are you buying these goods or are you selling these goods? Okay, are you the buyer or the seller? All right, first thing is, what if the goods are in transit? So the seller's shipping the goods to the buyer. Step number 1 is, what does the contract say? The contract might specifically identify at what point in time title passes from the seller to the buyer. If so, then that's governing. Okay, once the buyer has title, even though they don't have physical possession yet, that's it. It's their inventory, okay? If the contract is silent and the goods are being shipped by the seller to the buyer, then we go to step 2. So when the contract is silent, we look to the shipping terms to figure out, has the seller completed their obligation with respect to shipping? If it's FOB, what they call shipping point, buyer gets title to those goods, and thus it's their inventory once the goods get in the truck. Once the seller puts them inside the UPS or the Federal Express truck, buyer, that's your inventory. Even though you don't have possession yet, you've got legal title. The other situation is if it's FOB destination, then the seller puts the goods in the truck, but that is still the seller's inventory. They retain title. It's their inventory until the UPS or Federal Express truck actually tenders delivery, gives the goods to the buyer. Then it becomes the buyer's inventory. Okay, so if the goods are going to be shipped from the seller to the buyer, step number 1, what does the contract say? When does title pass from the seller to the buyer? That governs. If the contract is silent, look into the shipping terms. FOB shipping point, it's the buyer's goods, their inventory. They have title once the goods get in the truck. If it's destination, title remains with the seller until the shipment is completed, until UPS or Federal Express actually delivers to the buyer, then it's the buyer's inventory. Okay, on the exam, if the seller ever ships the wrong goods to the buyer, ships something, you ordered a refrigerator, they're sending you a washing machine. Well, that means the seller breached the contract. They're non-conforming goods. General rule of thumb is that's the seller's inventory. The seller's got risk of loss beyond the scope of what we're covering here. It's a business law issue. But once the seller breaches the contract, that's generally going to be the seller's inventory, unless the buyer wants to waive and say, hey, you know what? I need a washing machine anyway. I'll take it. Outside of that, that'll be the seller's inventory. When they breach, they keep title because they shipped the wrong goods. Okay, when goods are consigned, what does that mean? I own goods. I'd like to sell them, but I don't have a store. So I, the owner of the goods, I'm the consignor. I find somebody who owns a store. You own a store. I then send you the goods to sell on my behalf. Now, I give up possession to you. You've got possession of my goods. The question is, who has title? Me, the seller, the consignor, or you, the consignee? Even though you, the consignee, have physical possession of those goods, that inventory, that actually belongs to me. That belongs in my inventory. Even though I no longer have possession, I have title to those goods. That should be included in the seller, the consignor's inventory. Okay, now, once the consignee sells those goods to a third party, then it's no longer the consignor's goods. Then you would do your journal entry, debit your cash or receivable, credit your sales revenue, debit your cost of goods sold, credit inventory. Once the consignee, the sales agent, sells the goods to a third party, then it's no longer the consignor's inventory, okay? By the way, the consignee is just going to receive a sales commission. Okay, they don't actually pay for the inventory. They don't buy it from the seller. They're just a sales agent. They'll collect their commission once they sell the goods to a third party. Okay, other situations, we got to determine whose inventory is it, who has legal title. And again, general rule is whoever has possession, probably that's their inventory. Probably, but not always. Other exceptions, a public warehouse. You've produced a lot of inventory, there's a surplus. You don't have enough space in your store to store those goods. So you put some of your inventory in a public warehouse. Even though you don't have physical possession any longer, that's still your inventory. It should be included in your inventory. Your ownership would be evidenced by what? A warehouse receipt. But even though you don't have physical possession, include that in your inventory. Now, tricky question on the exam. Somebody sells goods with a mandatory buyback. At some point in time, they got to buy it back from the purchaser. That's the seller's inventory. Even though the buyer has title, that's the seller's inventory. So that's one of those tricky ones, unless you studied, you wouldn't get right. So it's a completed sale, but the seller has to buy it back. That belongs to the seller. Okay, the seller should include those goods in inventory, even though the buyer has both possession and legal title. Really weird. And then the last situation is somebody buys goods, but they're going to pay for it over a period of time. It's not like the normal buying on credit. Instead, you're going to sign a note payable, and it may take you a number of years to pay for this inventory. So that's called an installment sale. Now, the seller's worried that the buyer, the debtor, is going to default. So they tell the buyer, listen, I'm going to sell you these goods on inventory, but get on credit, but I'm keeping title to it, because if you default on the loan, I want the right to be able to take that inventory back. The question is then, who should include those goods in inventory? Okay, so it's it's an installment sale, a sale on credit, but the payments are going to be made over a long period of time. This is the way you got to do it on the exam. You ready? The buyer has possession. The seller's got legal title. Who should include those goods in inventory on an installment sale? Well, step number one, I need to know, can we reasonably estimate the uncollectible debts? If you cannot reasonably estimate the uncollected debts, then you include that in the seller's inventory. Buyer has possession, seller retains title, and that's the seller's inventory. If you cannot reasonably estimate the bad debts. If you can reasonably estimate the bad debts, seller has title, buyer has possession, and that's the buyer's inventory. Even though the seller's keeping title as collateral for that loan, as security, just in case the buyer doesn't pay for it, that is truly the buyer's inventory, okay? So with an installment, keep it simple. If you cannot reasonably estimate the bad debt, seller has title, and that's the seller's inventory. For bookkeeping, for accounting purposes, include that inventory in the seller's inventory, okay? All righty, little nuances there, no rocket science. You may have to write these things. The more times you write it, you hear it, you read it, you'll remember it, take the exam, and then you can forget it. All righty, see you in the next one. Don't do any questions. Come back. That was too short. Let's go. I miss you.